Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring on our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Thanks for being here, Andy.
Hey, thanks for having me.
All right, so we're talking Disney ahead of their earnings after the close. And I'm thinking this is going to be a real choppy earnings report, Andy, because I think you're going to have a drawdown or maybe a miss on ESPN or Disney Plus subscribers. You know, they've got some controversy down in Florida. I think there's going to be some cancellations, Netflix on top of that. But then the parks and recreation and some of their hotels should do really well, right? But, you know, what kind of data are you guys seeing out of LikeFolio on this name into earnings?
Yeah, I think you've got it right. You know, I think that consumer spending's been pretty strong. There's a lot of pent-up demand for people to travel, and you know, the Disney parks were certainly a beneficiary of that, a natural recipient of that pent-up demand. So we think that's going to do very well. Where I'm really concerned is what you hit on is Disney Plus. You know, we are seeing some really significant indications that Disney Plus is falling out of favor with consumers. Some of that's a political, debate and reaction that really Disney kind of stepped into at exactly the wrong time. Because one of the things that I want to highlight on this chart is overall subscription fatigue is extremely high, and people are looking for ways to cut things out of that monthly budget. They've got too many streaming services, too many subscriptions, and so for Disney to engage itself into a really hot button controversy at this time looks like it's going to have a significantly negative impact on their Disney Plus streaming services. But the impact on parks and hotels is probably going to be felt later down the road, as people tend to make those travel decisions well in advance, and it's not really as easy to change your mind about where you're going to go on vacation compared to whether or not you want to cancel a Disney Plus subscription service. So I don't think it's a Netflix-like moment, where they completely reverse course after so many years of gains. Remember, Disney Plus isn't really that old, and that initial surge of subscribers was enormous and difficult to hold on to no matter who you are. But as we go into this report, I'm really looking forward to understanding, Disney Plus subscription levels. I think that's a big driver for everything. It's a big indicator for everything that Disney does. It's kind of that first indication you're going to get on whether, these controversies and just the lack of real, really great content coming out of the company is going to take a long-term hold or not. So that's what I'll be watching for. The Disney Plus mentions, I think, as an early indicator, will be the one thing that I key on in this earnings report.
Andy, I think when you look at Disney, you have to look at them long-term, short-term. The long-term problem that they have is Disney Plus loses money, and it's getting, as your data shows, a bit unpopular. But they've got other problems, right? We spent a fair amount of time in the first segment talking about discretionary spending. Movies, theme parks, cruises, those are all discretionary spending that could take a short-term dip. But, as I say this, long-term Disney Plus problems, the rest, Andy, could be fairly short-term, right? I mean, you could still make a case where Disney has sold off that some of it is sentiment, right? There is a big sentiment about part of the country and part of the country, and they've become a slightly less popular than they were, but they're still a massive attraction, and this company is a behemoth. You put up an image on Google of all their different companies, and it barely fits on a page. So the Disney Plus is a long-term problem. Andy, here's my question to you. Is the rest of it a short-term problem, a possible recession, discretionary spending, things like that? That's something that may dip, but will eventually come back, and that may make this dip in Disney a buy, right?
Yeah, absolutely. I think Disney is one of the greatest companies in the world. It's, it's an inspiring company. When they're doing things right, no one does it better. And I think that they know how to do things right at scale, whether it's content or experiences, like no one else. And I don't think that's going away anytime soon. It's just this, there's levels of, consumer popularity. The fads go in and out, but Disney is here to stay, I think is a pretty good way to put it. The one thing, that I do worry about in a little bit the longer term sense is, what we don't know right now, because we're in the early stages of it, is how long these price increases can sustain themselves. Because like we saw with the pandemic, when consumers start facing, dramatic changes and start behaving differently over the course of 1 or 2 years, that can have a much longer term impact. And so I think if we can get through, just one summer of increased prices, it's really not that big of a deal. But if you start talking years, it could change, a generation worth of consumer preferences for where they go and what they do. So I think that's the biggest threat to Disney long term. But you're right, great company with an incredible content library.
Yeah, and I think if you offset some of the probably weakness they're going to see as far as subscriptions go for their Disney Plus, and remember they've got ESPN Plus, they've got Hulu, they package those. But the parks and the theme parks and the hotels, those travel experiences, Andy, they're full all the time. One of our producers was just down there. He said everything was just slammed, and that's what you're seeing a lot of commentary on. People are making those trips back down to Disney World, but you got shutdowns overseas in Shanghai on some of their parks. But then their guidance going forward as far as the movies go, that Doctor Strange just came out, it was a real big hit, but they haven't had any near-term releases. Is guidance going to be key here, and what kind of earnings score do you have on Disney going into this result?
Yeah, we don't officially cover Disney and put an earnings score on it because of the breadth of the offerings that they have. It's just, it's honestly too much for us to generate a strong statistical signal. That's why we like to key in on specific brands like Disney Plus, where I think there will be a little bit of a struggle in this report. So if I had to go either way, I would probably lean to the bearish side because that's what's paid this entire earnings season. But other than that, I think Disney is one of those companies that you put on your watch list and you say, all right, if it hits this price, something significantly lower than now, that's when I'm going to take a look, because like Kevin alluded to, one of the best companies in the world feels like very difficult to disrupt in any of the industries that it's in long term, and that is a really wide array of offerings that they make, and consumers overall love them despite some of the political fervor of the day.
Yeah, and I think that's going to be key, because this earnings season, if you're not doing everything right, you get punished, even though it might be a good report. Lower guidance, you get punished. If it's a bad report, but you guide good, it doesn't matter at this point. If one little segment is wrong, it seems like they're punishing you. The stock's down pretty significantly already year to date, about 35% off those levels that we saw at the end of December. All right, Andy, great stuff as always. Appreciate it.
Thank you, guys.
All right, that's Andy Swan, the co-founder of LikeFolio, breaking down the data for us on Disney.